Hey everyone, in this video we're going to take a quick look at AP2B. I'm not going to go through a detailed walkthrough of this entire problem necessarily, as I think it has a lot of components that we've already discussed in detail, and I want to give you guys some practice doing these problems, but we can just kind of look through it real quick, and I'll give you some of the totals that you can check yourself against once you go through and actually input all of the amounts and all that. So as a reminder of where we're at with this type of problem, we've got adjusting entries. We worked a lot on this in chapter 5. And so, yeah, hopefully you've had a lot of practice already. There's not a lot of calculations we need to do for things like depreciation or interest accruals, etc. Interest expense. It's all kind of just laid out for you here, what the adjustments should be. You will have to maybe back in for office supplies. We've got 10,400 on the books, but the count showed 2,300. So we need to reduce that down to equal the 2,300. So you'll need to put the difference in the adjustments column there. And the annual insurance policy was purchased on December 1st, 2017 for $21,900. And so if we look down here at the insurance policy, prepaid insurance, we have $1,825. So for that one, you'll want to take your $21,900 divided by 12 each month, and then kind of look back and just make sure, that was booked every month. And I think if you take the $21,900 divided by 12, you will get $1,825, because essentially what we're saying is that insurance policy lasted from December through the whole month of December, up until the end of November. December to November, 12 months. So this is just going to be the last month. So you should have a zero balance in prepaid insurance, because this is the last month of insurance after you do that, expense that last amount. But confirm that for yourself. Make sure that makes sense. And then the balance of owner's equity at the beginning of the year was $86.70. So if we're going to be preparing, I don't think that information, I'm trying to think here if that's 86,750. I suppose we can kind of see it. So what they're telling us here, and I think actually that's a little bit, I think this should say the balance of owner's equity at the beginning of the month was 86,750. Oh, no, I'm sorry. This is for the complete fiscal year ending November 30. So usually in a lot of the problems, we have the year ending December 31st. This one's actually ending in 2018. And so when we're preparing these financial statements, it will be for the full year. And so if we know that 86,750 was the total to start, and now we have 96,750, we can infer that there's $10,000 of contributions that were, additional investments to get this from the 86,750 it started at to 96,750. So with that said, when you do the statement of owner's equity, you'll want to have 86,750 as your beginning capital, and then put 10,000 for your additional investment. So I think that's all the kind of the little specific nuances of this problem. You'll want to input all those adjustments like we've done in chapter 5, carry those over. And like I said, I'll give you some totals here so you can just check yourself when you're done. So the total of all the debits and credits for the adjustments should be $11,175. The ending balance in the adjusted trial balance should be $759,250. Net income, I'll just put that in for you so you can see. Net income or loss should be $58,000. Let's see, ending capital should be $94,750. Again, note that beginning capital should be $86,750. And then you should have an additional adjustment here of the $10,000 for a contribution or an additional investment to get you to the $96,750 that it shows on the trial balance. And you want to carry down your net income here. These are your two additions. And then you have some withdrawals to account for, etc. but I will let you guys work on that. You can check your reference materials, the book, prior videos. We covered that in detail already, so I don't want to spend too much time going over that. I want to let you guys practice some of that. And then here we are preparing the financial statements. And so I'll just give you some totals and check figures here to make sure that you've got this all right. $266,750 total assets. Total liabilities is $172,000. And then capital, so the owner's equity account is $94,750. And then when you add 172,000 plus 94,750, that's where you get 266,750, which matches to your total assets, right? So our accounting equation balances assets equal liabilities plus equity, and good to go. So yeah, hopefully you got a lot of practice so far with the spreadsheet. Put your adjustments in here for debits and credits, carry those across. Calculate, if it's a debit balance, or for example, an office supplies debit balance, we want to reduce that down to the actual amount on hand, which is $2,300. So take the difference between those, put that as a credit, so your debit gets credited to reduce it, and then your ending balance should be $2,300, right, for that one specifically. So you got to figure out, what that credit is to reduce the debit down to $2,300. So yeah, hopefully with that kind of gets you started. Feel free to reach out if you have any specific questions. We can talk about this in class too, would be helpful if you do have any specific questions or places you're getting hung up on. But otherwise, hopefully that helps you get started, and good luck with the problem. Thanks.